we do have a very special guest investor today. He is a super member of our community. He is one of our international members, one of the few internationals all the way from Spain, Miguel Ángel Sañudo. Say hello, Miguel Ángel.
Hello. Hola from Spain.
Hola. Where are you in Granada right now, Miguel Ángel?
In Granada, yeah.
Love Granada, man. Love Andalusia. I love Granada. All right, Miguel Ángel, it is officially me and you time, buddy. You are particularly not average because you are international. You live in the south of Spain, one of my favorite regions of the world. If you look at my 23andMe, it's like 93% South Iberian Peninsula. So my bloodline is from there. And how did you even start thinking about buying rental income properties in the United States?
My wife's family lives in Miami. And at a certain point, we decided to buy a house there. So we wanted to invest because we were living everywhere in the world. We were moving from here to there. We have a lot of money. Not a lot of money. We have money to do something with it. We didn't want to have it at the bank. So we decided to invest in a property. We bought a house in Miami. Super expensive house. You know, market in Miami is. And then when we had to rent it, I had a lot of issues with the managers and with the tenants and with everything. So after 2 or 3 years, we stopped the main numbers and we saw that it wasn't working for us. So what we did was to sell the house, and with the money we get from that house, we buy a house in Jacksonville with you. Why with you? Because I have a friend that told me these guys work very well, and I do my research, and so far so good. So I'm happy with you. Yeah.
Love it, man. Yeah, that word of mouth, man, is a powerful engine. Greg put together your portfolio and how it's performed. But I know that normally when you start with JWB, they ask you your why. Do you remember what you had said your why was for investing in rental properties?
I wanted to get cash.
Okay.
Yeah, because when you invest in stocks, you don't get cash unless you sell it. And I want to get cash. So that was the only way to do it. Well, there are different ways, but this is, I think, the safest way to get cash. Yeah.
Yeah, I got it. And that's why you bought
cash flow. I mean,
yeah cash flow, because you bought in cash in order to maximize cash flow from the rental properties, not having a mortgage. Yeah. All right. So Miguel Ángel, this is your portfolio, man. You bought your first 2 properties in 2019, right? Like started in March, and then you went back in December, and then again in October 2020, and then again in February of 2021. This February 2021 is right around when I bought my third also. Can you tell me a little bit about the pace of this? Were you thinking about like timing out of like cashing out of your stock portfolio to buy these, or was it something else that was driving kind of like the pace?
No, once I cashed my house in Miami, it was very quick. So I decided to buy a house in Jacksonville with the guys. Then I talked to some of the guys. They presented me a few opportunities, and I decided, okay, I like this one. And it took no more. I think in 2 weeks it was done. Yeah, I signed all the papers through the website and electronically, so I didn't have to travel or anything. Mm-hmm. And after 2 weeks, I got a house. And then it was signed almost immediately, the first tenant contract, the first rent contract. And that was it. Yeah. And the second one is the same. If you notice that the first 2 houses, they are new houses. And then I say, okay, why not going to renew houses? So the last 2 are old houses, but I think they are cheaper, but they work very well too. So yeah.
Yeah, you see here the new construction ones are a little bit more expensive. Yeah. The second ones are less expensive, but they're still getting up there because they had already appreciated in price by the time they bought
1 year and 2 years. The price changed very quickly. Now you pretend to buy my first house probably is about 250. I don't know. Yeah. It grows very fast. So guys, buy the house now. Don't wait. Yeah.
Yeah, they say that you can always, it's not wait till the time to buy real estate, it's buy real estate and wait, right?
Yeah.
So you went in, you bought these all cash. So I guess what I was asking, you talked about the purchase experience of like you sign the contract and you get it. But had you planned this idea of buying every like 8 months or so, or was it? No,
it came out like this. Yeah. No. First 2 houses, I got the money because of selling the Miami house. The other 2, I decided to buy more because I want to diversify from the stock exchange. So I sold some stocks. And the moment that I got enough money, I just bought a house and then the other one. Yeah, it was like this.
So then Greg goes in, that's your portfolio. He then goes in, looks at your highest ROI that you've gotten so far, not including appreciation, lowest, and then he puts together like a whole snapshot. So this looks like the What's Gregory Place is the last one that you bought, has the highest ROI. 2021, you had 6.16%. Again, these are ROIs based on purchasing in cash, which show up a little bit lower.
My numbers are quite different because I also include how much taxes that I have to pay, and also the home insurance, which is rising a lot, and the property taxes that are also increasing much higher, quicker than the rent. A little bit lower, but yeah.
Okay.
More or less the same.
Can you explain that again?
Yeah. Those numbers are just without, in my case, I have to pay taxes because I'm not a US citizen. I'm paying taxes as a foreigner. So I have to pay higher taxes. And then this is calculated with the initial home insurance.
Okay.
And the home insurance price rising very quickly now. So that's much higher.
Okay.
In fact, this year, double the price that last year. So
from what to what? What was the price before and what's the price now? Do you know?
I pay 1,121 and I'm paying 2,100 this year.
Wow.
22.
A year.
So
Yeah. Wow.
yeah, a year.
Wow.
And
Is that for all of them or is that for the rehab ones?
especially for this one, I don't know why.
Just for this one. Okay.
The government decided that I have to pay more because it was, I don't know, in a particular area. I don't know why, but I have to pay a lot. So it made reduce the return, I would say an average 4.5%. Yeah.
4.5. Okay. There you go. Did you adjust the expected annualized returns that they had given you before to your tax situation? Is that something that you've had to do manually on all of them?
Yes.
Okay. Got it. Here's the overall outlook on the whole, Zillow, on the whole portfolio that Greg put together. From 2019 to now, you've gotten a total rental income of 74,432. Does that sound about right?
I don't remember the numbers. I think it's less than that. Yeah, less than that because I have to pay more than
because of the
more
taxes.
expenses than anticipated, and I don't have any tax savings because I have to pay taxes as I'm not being a U.S. citizen.
Yeah. So U.S. tax savings, it would have been this much. Sounds like yours is different. The good news is that you've had in just these like 3 years is this $210,000 in home price appreciation.
That's the good thing. Yeah. I'm counting on this. Yeah. Otherwise, it wouldn't be profitable. So I need the cash flow, but I also need to home price appreciation, of course. Yeah. Because I plan to sell it in 10 years, let's say, or 10, 15 years. So everybody plans for this. I don't want to keep it all the time. So I need the money is saved there and it's growing by itself. So that's a good thing.
Yeah. Rising in equity. Consumer pricing index inflation over that time has been 7.7%. So you're beating that. And then this is the actual ROI. So on your sheet, the expected return on investment was 5.5%. When you include the home price appreciation, which, as you know, isn't on those property evals, you're at 14%. So pretty big number there. What do you think of that?
Yeah. Well, the only thing that I see here, I think I think about it a lot. Good thing or bad thing on investing in properties, if you really need cash quickly, you cannot monetize it quickly. It's different from a stock. You stock and the same day you get the money. Here maybe it takes a month. So if you're really needing the money, you're thinking you're going to need the money, be careful. But if you are thinking on keeping the money there for a cycle, like let's say 10 years, it's a very good place because you don't need to think a lot. Just put the money, let you guys deal with it, and that's it. It works for you. Yeah, it's easy.
Given that you had those moments of like cash out of pocket for the eviction and the different things, how did you think about your reserves? Like, did you had the cash that you put this thing down? Did you have something laid aside for reserves for that type of stuff? Or did you have to like cash out stock to pay for that?
No, because all my properties are all cash flow. So I got a lot of cash flow from the other properties to pay whatever happens. So it's not when you have a mortgage and you have to keep on paying anyway, you have very little cash flow from any property. I have a lot of cash flow. So I use the cash flow from the other properties. So I was safe in this matter. Yeah.
I'm glad we hit on that. Like this idea of getting to like 3 or 4 homes, because when something is wrong in one, the cash flow from the others pays for it and doesn't really have to come out.
The more you have, the better you are. That's why I'm sometimes thinking, okay, I can buy a house of 250 or two houses of 125. Sometimes it's better to buy 125 because you can have this, you can pay with it. If you have only one house, If you're not getting money, you have to pay everything from your pocket.
The other teaching moment we like to show is this kind of like allocation of where the profit comes from. I think this is always really telling. You're this unique example because you're an all cash portfolio, like you own all your houses outright. But it's this idea that most people obsess over the cash flow sector of the return in different markets or different rental properties. They're looking to hit some magical cash flow number. But at the end of the day, even in the highest cash flow kind of like environment, the rental income looks like a little bit over a fourth of what your total ROI was, while what you're benefiting from, this home price appreciation, this equity, this wealth that you're building, is this like open mouth Pac-Man here. So we like to show that.
It happens, yes. Cash flow for me is important because I use it for spending in the other houses or whatever it happens, or even in my life. But home price appreciation is the main objective of my investment in property, yes.